Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Tuesday, March the 4th, 2014, and it's 10 p.m. time in Toronto. In this video, I'm going to review for you four major Forex pairs: the pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus the US dollar. So let's start from the pound versus the US dollar. Those who follow me and subscribe my free newsletter know that on the weekends I do a weekly review, and for this market, the pound versus US dollar, the next level of support in the sequence of measured moves, extension measured moves on the weekly and daily, it's this 165.40.50, and that's where I anticipate this market moving to see whether program trading is going to react to this level and eventually keep pushing this price higher. If we move on the date on the on the 20-40 minutes chart, we can see here that we had actually on Tuesday, today we had a measured move that actually worked. And if you trade this, congratulations, because we had price stopping at this 167.04, 167 level here, which was the level of resistance, and with a stop above 167.18, you will be into a free risk trade at the moment. You still could actually be in this trade, and there is now a possibility for this market to retrace into the all the way halfway back here before a continuation lower. Just want to show you on the 15 minutes how you could actually time this trade. It's not easy to see it because all the markets in the morning actually had quite a steep move higher, and but this market actually started trading in extension right away. We could see this 166.70 level traded with the front run, and then highs to highs. The level of failure and entry short would have been the breakout of the 66 breakdown, rather 66.94 here entry, just above highs, and this would have given you a free risk trade, and you would still be into this trade. So congratulations if you got this trade. Going forward, as I said, I anticipate a retracement lower. So the first target for this trade is 166.09, and then we would actually keep moving lower into this 165.40. Moving to the Australian dollar versus the US dollar. Again, this in this market today we had again a short which you could actually time. This is high to lows. You always need to look at these moves. Highs to lows of 50% retracement are very high probability trades. I like them a lot. That's what I look at. And but we also have a way to time this trade. Now, if you remember well, yesterday I gave you for this market, I gave a level of resistance that initially were respected, and actually also provided a free risk trade here, and I'll show you this in the 15 minutes. But the market eventually came back to test that higher level of resistance, and that's why you have to always have your stop in place. And if you follow the method, you will not find yourself off guard, because if you take profits, half of the profits at T0, you will always enjoy full protection if the market actually stops you out. And of course, you'll only pay costs and slippage, but you know, you actually can actually guard and make sure that you actually protect your capital, which is rule number one for a trader. So now in the this move actually was not easy to identify a trade on the 15 minutes. So let's see what we could have done here. So the first sorry, the first level excuse me, the first level was actually this 089.83, and actually the sequence here was very clear. First level to target, and then you could have actually could see that this price came into the second target 089.44. The high was 089.38. Actually it was 6 pips, so actually it was a difficult call to do to make here. So I would consider the uh, the worst case here. The worst case, you would have entered at 089.16 with a stop above the 089.40. So this would have been 24 pips, and as you can see here, we didn't get 24 pips before the high was hit. So this trade was actually a stop out, because you couldn't actually reach the T0, and the reason is how this wall measure move is going to be modeled, and in this case is one of the cases which is not easy. Another way to model this would have been 089.15, and then first and second target, this was a high to high, in which case with this entry breakdown or 89.30 with a stop above highs, we would have got a T0 target here, and eventually those stopped out. So the other sequence was even more difficult to model because of this of the way this market moved, but definitely there was an all the way halfway back here. As we can see, it traded. This was the 089.28, which was brought price into first target. Then the actual entry would have been if we were using the 15 minutes on the break down of this 089.56 or 089.55, the entry, and a stop above highs. So this is the way you would have traded this market here. So you have to trust these levels and let the 15 minutes tell you when that's the best time to enter. Otherwise, you can risk, and you should risk a little bit less than 1% of your portfolio when you takes this trade on the 20-40 minutes. This would have been short selling 089.85 and putting a stop on 090.08. Moving to the US dollar versus the Canadian dollar, the daily, it's not telling a lot to us. We know that we have support below these levels, and also we know that when it trades lows to highs here, recently we had this market short support at this level, and this is the reason why 110.50, this is the reason why this market is not moving lower quickly, because we have supported this level, and this support worked now once and twice. So it's kind of a tested level of support, and this could actually continue higher. When we move to the 40 minutes, you will remember that there was a level that I gave you yesterday, and this level worked. So it could be traded even on the 20-40 minutes here, and you would have received a free trade here if you traded this. Eventually this level 110.99 was retested, but still market was not able to push this price lower. However, also bulls showed weakness here, because the first time they were able to support the 110.73 the price, but the second time they were not able to do that. And bulls and again the bears were the same, because they were not able to keep price below this 111.34. So this is now what what the traditional technical analysis you would model as something like this. This is a consolidation. That's not the way I look at things. I look always at things at levels. So this does make no sense to me. To be very honest with you, I'm going just to delete that, because I showed you how, by considering the levels and the failures of bears and bulls, you actually have the definition of indecision, which is what a triangle actually models. So triangle models indecision. Indecision is showed by non-participation or lack of participation of bulls and bears at different levels. So what can we expect from this market? But we already saw something here, and that was actually the highs to low, which traded, and we always have to keep in mind these levels. Remember, always swing highs to low can have participation. This trade here, selling 111.58 with a front or in the stop above 111.34, would have offered a free risk trade here, and that's what I'm going to review very quickly on the 15 minutes. Again, all the markets show the same behavior, but instead of showing the 15 minutes, I'm going to show the 1 minute here to show you actually how this complete move higher could be modeled. And I will start from this move here, this part of the move, highs to lows, and then highs to highs, and again highs to highs, because we touch and go above first and second level. And as you can see here, in this way we can actually model this market quite nicely. At some point, highs to highs again, we got the failure, and that was our entry in this market with a stop above highs, and the entry was short below 111 110.99 with a stop above highs, which was never taken out. So at the moment we have targets below here, and if actually we get to that target, this market has the potential to retest these lows, and we'll need to see what happens there. So if we move higher again into 111.58 and we hold, look at the sequence of 15 minutes there, and eventually trade it. If we get a break, trade on the downside, and the first level of support would be again this 110.51. This is holding steady here. Finally, New Zealand dollar versus the US dollar daily chart keeps moving higher. We had this high to high is our extension and support at the moment. Initially didn't hold very well, or 82.64, but the 61 level was never reached, and we know that now this target, this measurement was a target above 84.52. On the 40 minutes chart, I want to show you the sequence that I showed you also in the last video. It was highs to highs, and we got participation. 082.81 was respected, brought price into first and second target, and after that the sequence of measurement failed, because actually price went below this red line here, 83.64. And then I was anticipating a measure move lower into the old halfway back. We never got that there, and actually we are actually trading at the moment. Actually, initially we traded a short, and I was anticipating this short to bring price right into this area of resistance and support, sorry, and as you can see, we got participation on the downside here, and we would also have got here a free risk trade. But eventually there was another level that came into place. I'll remove this level for the moment. There's still a possibility that we get to that level, and that would our rules would tell us. So there is a level here which is acting as support. This is not a good trade based on prone trading, but it's still pushing price higher. So if we get below now this 83.36, we will retrace into the old halfway back. And I hope this video is useful. There are a lot of opportunities here. Thanks for watching, and good luck tomorrow with your trading. Bye bye now.